Today we're going to talk about 4 key things that you need to keep doing to be successful at trading. Stay tuned. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to talk about 4 key things that will ensure your long-term success at trading. Now, one of the things that, first thing is, well, just before we get to that, I just want to talk, I was talking to a gentleman on email. He's a trader, he's been trading for years. The guy's an icon, but he's been very successful. He flies under the radar. And, we had a chat about all the different things, and you can go back and look at charts from 100 years ago and you're going to see the exact same stuff that we see today. We have this misconception that computerized trading, algorithmic trading, all the advantages that we think we have actually made it easier or better for traders to succeed in all the different instruments. Now, I'll agree that at no time have we probably had greater opportunities to trade. We have such great access to the markets now. Even the fact that you can trade micro lots, CFDs, all these different things. I don't trade any of that, but just in terms of the opportunity for you to just really seize the market and learn, for very minimal, in terms of cost, to get in there and actually learn and cut your teeth. It's incredible. Probably at no greater time in history have we had the opportunities that we have now. So the information that you have available, really, there's nothing stopping you from succeeding at trading. And 4 things that I think are really critical, especially if you're a discretionary trader or you take your own positions, you don't use computerized trading or anything like that, is number 1, if there's nothing there, if you've defined your trading plan and there's nothing there, don't trade. Don't try to fit the fact that, if you're frustrated or the market hasn't, it's taking too long to set up. Like I'm mainly end of day now. Very rarely will I ever go intraday, and for the most part, I haven't done that for the last little while. But not to say that there's not other opportunities. And whatever time frame you're trading on, if there's no trade there, don't trade. There's going to be hundreds, thousands of more trades. Do not try to force the market to force your own desires onto the market. So if there's no trading set up, don't trade. Don't be attached to the outcome of any one individual trade. Now, we've talked about this in several other videos. The main reason most traders fail is that they engage in irrational, impulsive, and emotional trades. They blow their accounts up. They over leverage. They revenge trade. They average into losers. It's the money management part that blows them up. You're in the business of risk management. Don't be attached to any outcome of any individual trade. That's like, I love what Peter Brandt says. That's a data point in a continuum of multiple data points. You're going to have thousands of trades, maybe hundreds or thousands of trades. So why would you let one trade blow you up or significantly destroy your account? Now, this is one of the challenges that retail traders or small traders who are trying to get into the markets struggle with, is that they've got a small account and then they're lured into this idea of using big leverage to try and make unrealistic returns. What I'm going to encourage you to do is use the smallest lot size possible. Micro lots are brilliant for just focusing on your trading process and executing that flawlessly, getting the runs on the board, having excellent record keeping and journaling about not only your profit and loss and your trade strategy, but your emotional state. You're tracking the markets. You're looking at bigger time frame compression patterns. Get in the process of being a professional. Get the runs on the board. Don't be attached to an individual outcome of any one trade. It's just another trade. Bang. If you allow yourself to be impacted on one particular trade, you're going to destroy your psychological capital, but you're also going to be distracted from being able to observe and follow other instruments in your basket. So I know this because I've done that. I'm asking you to step back and get in the process of tracking your markets. When you do have a signal present or you're putting an order into the market, that's just another trade. So your position sizing and money management is according. You're in the business of risk management. You take a loss on that trade that's not significantly impacting your trading capital. Now, you might go through losing weeks, losing months, even losing years. And Peter Brandt, again, talks about this. If you haven't read Peter's books, go to his blog, Google him on YouTube, listen to some of his interviews. The guy is probably the purest, one of the purest classical chartists, probably one of the best known classical chartists out there. Peter's been trading for 40 years. But listen to the wisdom that he passes on to you. You don't have to trade that way, but listen to the golden nuggets that he'll pass on to you that will help your trading. Number 3, Paul Tudor Jones talks about this. Look for asymmetrical, low-risk, high-reward opportunities. I read in one article that Paul Tudor Jones doesn't look at anything less than at least a 5-to-1 reward to risk opportunity. So when you do that, you can take losses and take those trades. And when you get those profitable trades, and I'm sure he's had a lot greater than 5-to-1 on some of those trades, but you have to step back and tilt the odds in your favor. Otherwise, you're going to be trying to hit all these trades, and a lot of small losses can destroy your trading account. So step back, look for the opportunities that are going to be skewed in your favor. And again, minimum, I don't care what it is, you should be looking at a minimum of a 2-to-1. Now, I know some traders say they've got a high hit rate and everything else, but the problem with that is that oftentimes at some point there's a mismatch in their risk management, and they'll end up doing some sort of significant financial impact to their trading account. Number 4, trade, learn, and get better. You're going to make mistakes. Welcome to trading. If you cannot handle the ups and downs of speculation, then this probably isn't for you. But if you're diligent and doing the work, which 99% of the traders aren't doing, and they're looking for some sort of trade identification strategy as the answer to their problem, you need to do the work. Take the trade, manage the risk. What did you learn? What did you do well? What could you have done better? What can you do better next time? So these are all the things that will constantly hone your skills. Simplify your trading method. Try to eliminate any of the variables that are going to cause analysis paralysis or prevent you from executing and duplicating your results consistently over the long term. So hopefully you got some value out of that, traders. Just to rehash, number 1, if it's not there, don't trade. Don't try to force your desires onto the market. Number 2, don't be attached to any of the individual outcomes of the trades. Number 3, try to look for asymmetrical risk-reward trades that are highly skewed in your favor. Trade, learn, and get better. Be journaling every single day. So if you don't have a journal, get a notebook. There's other software out there. I'm trialing some new stuff right now. So far, it's fantastic. But you got to be able to track your results. You got to be able to see where you're making your mistakes. Try to eliminate those out. Focus on what you do well. Nobody said this was easy, but if you're serious about being professional and succeeding at trading, it's like any other elite performance activity. Go to my homepage, get my 7-step daily routine for high performance traders. It's about cultivating the daily habits and rituals that are going to be congruent with the results that you want, not only in your trading, but in other areas of your life. If you want to be a master, trading mastery is a journey, and it's always about constant progress. So stay disciplined, traders. Keep getting better, and may the markets go with you. Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.